Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 26th of September 2021. In the financial markets, when a major event occurs, it's common to hear the words, "Nobody saw it coming, nobody could have predicted this." But is that really true? Such occurrences are often termed black swan events. Now, before Australia was discovered, people thought all swans were white. And it just took one observation to completely invalidate the theory that had been based on thousands of years of observation of millions of white swans. In Australia and New Zealand, these black swans are actually rather common. When it comes to black swan events, what attributes do they have? Well, firstly, such events are rare and lie outside regular expectations. Before the event, people would think it was impossible because it hadn't occurred before. The second attribute is that it has an extreme impact. The third attribute is that after the event, people make out that it was totally predictable and they come up with explanations for the event. Now that's all very well in retrospect, but in actual fact, nobody predicted it prospectively. I actually think that the term black swan is overused these days. Not all negative events in financial markets are valid black swans based on these criteria. So let's look at some examples. The Bre-X gold mining scandal occurred in the late 1990s, and the movie Gold is loosely based on this story. This involved a gold mine in Indonesia, and initially the gold reserves were estimated at 10 million ounces, so already a tier 1 asset. The reserve estimates steadily rose to 30 million, 60 million, 70 million, then a whopping 200 million ounces. The stock price obviously rose accordingly. But what investors didn't know was that the samples that were used to make those estimates had been salted with gold by the geologist. Price seemed to consolidate for a while, as you can see on this chart. And during that time, Bre-X partnered with another mining company called Freeport. And when Freeport took their own samples, they only found minor amounts of gold. As a result of that, stock price dropped, but then rapidly plummeted fast when the geologist actually fell to his death from a helicopter. Now, I think it's fair to say that this was a black swan event. This had never happened in the history of mining anywhere in the world. And, when the news of the fraud came out, price responded pretty rapidly, as you can see here. So, look, perhaps there were some individuals who knew what were going on at the top over here. And, maybe they knew what was going on and had actually sold, causing that kind of topping process. But look, who knows? Next, we look at Enron. Now, this chart shows the Enron price. And from 1996 to 2001, so the whole price action isn't shown here completely. But over that time, Enron was the darling of Wall Street. Its share price just kept rising, and Fortune magazine called it America's most innovative company, and they said that 6 years in a row. Now, we know that during this topping pattern over here, Enron executives and directors sold over $1 billion worth of shares over this time. If we look at this point over here, so that's C, we can see that at that time, the company had reported profits of $500 million for that quarter. And that resulted in a little bit of a perk up in the share price, but that was brief. And it kind of hit this neckline, I guess you could say. And then price proceeded to drop. So that might have been a bit of a clue that there was a problem there. But Anyway, by the time it got to D here, the CEO actually resigned, and he said he resigned for personal reasons. A week later, the new CEO not only sold $2 million worth of his shares, but he also urged employees to buy shares of the company and reassured them that the company was totally solid. And he predicted significantly higher prices. He was telling them that this was a massive buying opportunity. But, obviously his actions in selling obviously told a very different story. A month later, and that's point F here, he reinforced the message. So he held an online meeting with all the employees, and he told them that it was still a good buy and that the company's accounting standards were legal and totally appropriate. Again, briefly, the price spiked up a little bit, but it was very short-lived. Here at G, Enron reported a quarterly loss of $600 million. And then further down here at H, that's when the SEC launched an inquiry into Enron's accounting. And of course, that was followed by bankruptcy. Looking at this chart, I'm not sure that this could be called a black swan event. I mean, accounting fraud is nothing new. And, this played out over a long time. So the market sniffed out trouble over this whole kind of year or so, with price kind of grinding low. It wasn't like a sudden, something suddenly happened and everything crashed like that. Next, we have a more contemporary example of Wirecard. So for 10 years, this stock had moved up very nicely. And we've got what looks like a kind of parabolic move here, haven't we? That looks fantastic, doesn't it? And over that time, price went from €4 in 2009 to €200 almost at its peak over here. And actually, when it hit that peak, Wirecard actually replaced Commerzbank in the DAX index. Of course, price peaked there and dropped. And during that first drop, police had actually raided the Singapore office. This was later followed by a bit of good news, actually. And so that was where $1 billion deal had been struck with SoftBank. And so that caused a nice bounce here in prices. But then prices began to drop. And during that drop, KPMG audit confirmed that Wirecard's profits could not be verified. Now, as a result, obviously prices dropped, but they didn't really plummet to this degree. There was a bit of a delay there. Prices really plummeted down here. It's only kind of halfway through this massive red candle that it was announced that 1.5 billion euros was actually missing. Now, it's clear to see from this chart here that some investors clearly saw something coming before it actually hit the news. And again, like at Enron, I don't think we can call this a black swan event. The whole drop played out over 2 years here. Finally, we move forwards to the present day and look at Evergrande. Now, I hadn't heard of this company until about 2 weeks ago. And, the news stories that we're hearing are making out like it's an unexpected black swan event and this is going to crash the markets globally. But look, I'm not so sure. This chart suggests that trouble has actually been brewing with this company for the last 4 years. In November 2018, the central bank had identified Evergrande as having the potential to cause systemic risk. So obviously, the powers that be had their eyes on this. Debt had been a big problem for this company, and cutting their debt down to 23 billion did perk up the share price a little bit. But again, that was temporary. And this remained in a long-term downtrend. So after this spike, price was dropping, and at that point, the company actually started offering a 30% discount on properties. And then earlier this year, they sold off a whole variety of their assets as well. And it's only really hitting international news down here, at which point it's already lost 92% of its value. And so, you know, this isn't something that's a surprise at this point. And so, yeah, I'm just a bit skeptical in terms of the level of effect this is going to have on the markets. I've got a feeling this isn't what's going to be a direct cause of the big one. You know, we might get a bit more of a dip in general stock markets in the next week or two. But look, I'm not looking for an outright crash here. Anyway, we'll see. If we contrast this to something like Freddie Mac chart, and, you know, here, obviously price was consolidating, but I think this could be called a black swan. I mean, price just plummeted really rapidly. And so, you know, contrast that with the previous chart where price was grinding lower and lower and lower. So in conclusion, when looking at charts, it can be tricky to distinguish between a healthy correction and a serious reversal. So when you're looking at individual companies, understanding the fundamentals of the business might help, but not all the time. You know, fraudulent companies are capable of producing fraudulent data. So what is one to do? Look, it's not easy. One thing common in all the cases that are presented here is news that raises the suspicion of some shenanigans. Now, this won't necessarily hit the mainstream media and the big headlines, and so you might need to dig to find that kind of news. The other thing that can be useful is to look at what the insiders are doing and compare it to what they're saying. If they're saying things that aim to pump up the price and saying, you know, what wonderful prospects the company has, and yet they are selling their shares, then it's time to start worrying. Next up, the market update. Let's start with the US dollar index on the daily scale. And interesting, isn't it? The price has been hovering up and down around this line here that I'd drawn. So that's interesting. There seems to be some kind of pause point there. I mean, as I said last week, it could still go up to here, but I think this, if it were to go up, this would provide significant resistance. So I'm still looking at this thing rolling over and heading down, down, down. If it goes above this 94 level, then it's going to spike pretty fast, I reckon. But yeah, I just don't think that's going to happen, but who knows? Let's move on to gold priced in US dollars on the weekly scale. And I'm using the weekly scale to give us a little bit of a perspective. I was going to do the monthly, but of course the month hasn't finished yet, so we'll do that next week. But on the weekly scale, look, basically, I know that every time we drop, and especially when we have these big red candles, it can feel quite frightening. But if you actually stand back and look at it, this whole time we've just been moving sideways, and we haven't made any lower lows for quite some time now. But look, okay, we haven't made any higher highs either. Yeah. So this is a sideways move. And so, again, you know, it's not something that I feel particularly stressed out about. That's what corrections do. And, you know, and if we were to break this line here, so that's by joining all these three lows here, look, I don't think that can withstand another test. Okay. I think that's highly likely to break if it's tested one more time, in which case then we're going to have a drop somewhere through this range over here. But until that happens, look, I think there is still potential for upside as well. Which of those is going to occur? Look, I don't know. And so, you know, a lot of this is talking about, you know, support areas, at what point we would change our mind about things and so on. Also, remember previously I'd drawn this pitchfork over here, and we've been kind of heading down, but that downwards momentum has been slowing, and we never did get to this line here. Let's have a closer look at that area. So we're going to just zoom in around here, and so as you can see, you know, price obviously dropped quite dramatically, and I was worried last week. I was saying if it dropped to 1720 or lower, then yeah, we're probably going to plummet a lot further. But look, I mean, price, once it reached close to that level around 1740, we've kind of been drifting sideways here, and here we've made higher lows. So if we start making a higher high above here, and then of course, you know, this is a step-by-step process obviously, then we can look further upwards. But this is the line here, so we're looking at about 1734-ish. If that breaks, then I would actually start to get concerned. Now, sometimes, of course, it can just quickly spike and then come back up. So I'm talking about a close below this area. That's when I'd start to be concerned about that lower trend line getting cracked through. But let's see. Now, the other thing we were looking at is the parabolic chart. So this is the parabola that we've drawn so far based on the lows. And again, it's a nice fit. And so for next week, to be on that line of best fit, we would have to have a low of 1726 at most. I mean, obviously it can drop a little bit lower, but that's the kind of area we're looking at for this parabola to kind of stay as intact as possible. If it goes below that, and certainly below that trend line, which is what this dot represents, then we'll have to plug in this last dot here, and so get rid of this one and then plug in the new number. And so you can see how it's very different when you're plotting these things prospectively, because you don't know at what point you can confirm a low. You have to wait. So, you know, this was a tentative one. Hopefully it stays, but, you know, we don't know for sure yet. So we're kind of taking this step by step as we go. But 1726, I think on the chart, on that pitchfork, it was about 1734-ish. So that's the kind of range of a low where we would want to see a turnaround occurring. Whether that will occur, who knows? And I thought we'd look at the COT reports as well while we're here. Now, obviously, with that video that I did previously, I don't think it's hugely, you know, instructive, but let's have a look at it. Obviously, when things are extreme levels, so for instance, this red line here shows the commercial short position. You know, when this is 0, then that's a pretty good sign. I mean, something like that happened here and here. But, you know, we're not at that point. We're not at an extreme in either direction, to be honest, at the moment. And throughout this consolidation over here, the short position has remained kind of relatively stable. So I don't think we can really tell much by looking at that. And next we move on to silver in US dollars on the daily scale. And silver, I talked about 22 being an important level there. Now, thankfully, actually just stopped short of that and bounced up quite nicely, but it's coming back to retest it. If we close below 22, then I think there's a very good chance that we're going to drop down to here. 20 is the first stop there. And that's because we've got a lot of thin air here. There's not much price action on this side of the chart over here. And if you do the volume by price, which we looked at last week, again, it's very thin there. So we better hope that holds. Okay. And this is a COT report for silver, which is interesting though, because the short position is dropping quite significantly here, you can see. And if we look back to this area here, it's actually less of a short position than it was back here. So yeah, I mean that could be a positive sign. It doesn't mean it's the end of any drop. I mean potentially, you know, if this were to drop to 20, this could go up to 0, in which case that would be a major buying opportunity potentially. Okay, next we move on to the gold miners, and this is the GDX on the daily scale. And again, last time I talked about two things. We've got this shift pitchfork here, as well as this downward sloping channel, which I'd drawn by joining these two lows and then extending the channel upwards to this high here. And yeah, I mean, this is drifting downwards. I don't think there's any sign of a bottom yet. So as long as it's going downwards, we have to assume it's going to keep doing so. All we can do is look at potential turnaround points. So one is this green line here, which is pretty close to where we are now. The next one would be the bottom channel line, which is a little bit further down. And if this is a correction, then, you know, we could potentially be even going down to just above 26. The potential for that is there. And so you do have to keep your mind open to that possibility. And if that were to happen, that would, of course, close this gap over here, which has been on the back of my mind for quite some time there. So, yeah. Let's see. Hopefully it doesn't go that low, but who knows? Yeah, so basically, yeah, there's no sign of any bottoming price action here yet. So we're just going to have to sit and wait. Now, of course, whole price action has been very grinding. A lot of people have given up. You know, what do? Do you throw in the towel? Well, I saw an interesting thing on Twitter. There's one person who's quite good to follow called Gold Ventures. He's very good with the mining stocks, and he put out a tweet saying if I were to throw in the towel here, then these guys would be buying up my shares. So yeah, I think that's a very good point, you know, and I think that's pretty likely, actually. These guys know what they're doing. And I mean, look at Rick here. That photo makes him look a bit like the cat that got the cream. Anyway, yeah, Rick's very smart. And I haven't heard him lately, but he's probably buying. I've heard a lot of these top guys saying that things are mining stocks anyway, seem to be dirt cheap at the moment. So I doubt they're throwing in the towel. Anyway, I do remember one story that Rick said about how he'd bought Paladin Energy years ago at 10 cents a share, and it proceeded to drop to 1 cent a share. So, you know, we're talking about a 90% drawdown there. And he just wasn't bothered, you know, because he understands volatility and he understood the reason why he was buying the stock and the underlying thesis. And of course, as many of you know, that stock went up to $10. So he did pretty well there. And so a lot of this is understanding the volatility and accepting that, you know, you're never going to catch the exact bottom, but, you know, the closer that you can get, the better, obviously. And understand, you know, the reasons why you're in a stock. Okay, next we move to the SILJ. And so what I've done here, so of course we've had this drop down here, and it's kind of forming a bit of a curve, I guess. So maybe we're getting close to the end. I don't know. There's a couple of interesting things here. So first of all, I've drawn the fibs here, and you can see that we're close to the 50% retracement over here. We're not quite there though, so we might get a little bit further down. We've got to get to 11.84 to touch that. And so so that's one to look out for. Obviously the next commonest one will be 61.8, but it better not go down there. I think that's just that'll be a complete washout. There'll be 0 balls left at that point, I reckon. Well, maybe 3, as shown on the previous slide. Okay, and then down here we've got the distance of price from the 200-day moving average. And if we were to break this lower line, then I think the chances of going to this level are much higher. So we're almost there. We haven't quite touched it, but watch for maybe a turnaround at that point. You know, if this turns upwards, then you know that sometimes that can occur before price turns around. So that might be worth watching as well. But yeah, look, I understand these things can be painful to sit through, and you know, looking at your portfolio, all the, you know, if there's red there, it's not fun. But a lot of this is actually practice and keeping your head sane, and you know, not getting caught up in any kind of mania or euphoria or depression either way. Okay, now we'll finish with a story that made me chuckle this week, and it's all about contraband. Now, to put this in context, Auckland is the biggest city in New Zealand, and it's basically been cordoned off from the rest of the country. You can't leave or enter it without permission, and from what I hear, only about 5% of applicants get permission. So they got police checkpoints at the city border roads, and last week 2 men were arrested trying to enter the city. And when the police searched their car, they found out that they were carrying $100,000 in cash. But perhaps more disturbingly, they also had a boot full of other contraband. Here is the evidence photo. Yes, they had 3 buckets of Kentucky Fried Chicken, as well as an undisclosed quantity of fries. Now, clearly banning takeaways has resulted in KFC taking on the aura of a high-value illicit substance. Well, as they say, when KFC is outlawed, only criminals have KFC. Now, I wonder what the street value of this haul was. Anyway, I reckon the cops were pretty onto it there. When they saw the car, they must have suspected foul play. Boom! Okay, anyway, enough corny jokes from me now. That's it from me this week. All the best and see you next week. Bye!